No matter how experienced you are as a trader, whether you've been trading for years or you're just getting started, there's one skill that's always worth sharpening, and that's understanding the most bullish and bearish candlestick patterns. I use candlestick patterns every single day as part of my analysis, and over time, it's become second nature to me, which means I don't even need to think about it consciously. I can just glance at the chart, I see the pattern, I immediately get a feel for the strength or weakness behind the moves. And that's important because I personally trade momentum. That means I want to buy strength and sell weakness. And those candlestick patterns give me a very good insight and clear signs of when buyers are in control or sellers are starting to take over. Candlestick patterns give me a quick visual way to see the story basically unfolding in real time. They reveal momentum shifts, price rejection, emotional pressure, and when you can spot those things instantly, it gives you a real edge regardless of whether you're trading indicators, trend lines, fundamentals like me, or even algos. In this video, I'm breaking down the 10 most powerful bullish and bearish candlestick patterns that you need to know. These are the patterns every trader should be able to identify in an instant, and I'll walk you through each one of them in plain English so you can start looking and finding them right away. But make sure to hit the like button to support the channel, and let's dive in. Let's start with the bullish patterns, the candles that show buyers are taking charge. The bullish Marubozu is the most aggressive bullish candle out there. When I see candles like this, I know it's a good time to buy or sell because the momentum is so strong. Bullish Marubozu candles have long, solid bodies with no wicks, meaning that the price opens at the low and closes at the very high. No hesitation, no pushback from sellers, just pure buying strength from start to finish. In this gold chart, you can actually see a very clear bullish Marubozu pattern after a period of consolidation. It's a strong sign that buyers are stepping in, which is why it kicked off a more significant uptrend in gold. Now, the hammer pattern is a classic reversal candle with a small body at the top and longer lower wicks. In this pattern, sellers tried to press the price down, but buyers pushed it right back up to the top, which is why this is a very bullish sign. You could see an example of this in the Eurodollar chart. Eurodollar made a new 3-day low and rejected the lower price level, rebounded and ended the day at its high. This often signals the start of a potential reversal higher, and that's exactly what we can see in this Eurodollar chart. The bullish candle with small wick, on the other hand, is your bread and butter bullish candle. It's the one that you probably see the most often. It's got a clean green body with small wicks and shows that buyers were generally in control all session long. We can oftentimes see this in a strong sustained uptrend, and it confirms that the uptrend's intact. Here's a good example in pound dollar. Normal bullish candle with small wicks on both sides confirm that the uptrend is intact with healthy demand from buyers. The spinning top has a small body and wicks on both ends, and this actually shows indecision. The buyers and sellers both gave it a go, but if the spinning top closes green, it means that the buyers won, even if just slightly. Now, on its own, it's not a signal to buy, but if it forms near support or after a pullback, it can be the beginning of a bounce. Here, you can see a bullish spinning top in the Euro-Yen chart. Now, what's interesting here is that it's after an attempted rally. The spinning top, even though it's got a bullish bias, actually tells us that the buyers could not sustain the momentum and the downtrend resumed. And this is another reason why it is one of the weaker bullish candlestick patterns. An inverted hammer has a small body at the bottom and a long wick pointing top. It shows that buyers tried to push the price higher and were met with strong resistance, but it still signals that sentiment may be shifting. If you see it after a downtrend and the next candle closes higher, it could confirm a bullish reversal, which is the kind of what we see in this Eurodollar chart. The inverted hammer signaled positive uptrend for the Eurodollar, but it's not a very strong bullish pattern, so I would be very careful of this one. Now, let's switch gears and look at the bearish patterns, the ones that shows that the sellers are stepping in with force. The first one is also one of my favorite, which is the bearish version of the Marubozu. It's a strong red candle with no wicks, where the price opened at the high and closed at the low. And you can actually see two examples of this in the dollar-yen chart. Sellers were in control from the very beginning, leading to continued sell-off over the next few candles, and this happens in both scenarios. This pattern usually signals strong downside momentum, especially if it breaks below key support levels. The shooting star, on the other hand, is a small body at the bottom with a long upper wick. I like this pattern a lot as well because it tells you the buyers tried to rally the instrument, but sellers crushed the move by the close. And when you see a shooting star after a strong uptrend, it's often an early warning sign that the rally is running us out of steam and it's over. In this dollar-yen chart, the shooting star pattern forms after a period of consolidation. And even though that's the case, it correctly signaled a breakdown lower. When you see a shooting star, look for opportunities to sell, not buy. The bearish candle with the small wick is your standard strong red candle. Clean body, small wick, steady selling pressure. Just like the bullish version shows strength, this one is clearly dominated by sellers. If you're ready in a downtrend, that is often a continuation signal. Any sign in this pattern, like the one you see here in the pound dollar chart, is a sign to expect more selling. A bearish spinning top looks like the bullish spinning top, but it closes red. It also shows indecision, but sellers in this case have the final word. Again, not a trade signal by itself, but when paired with resistance or a stall rally, it can add to the bearish case. What's interesting about this Nasdaq chart is there's this bearish spinning top after a bullish spinning top. Both candles reflect indecision. Coming off a downtrend, these two candles combined with a higher high and higher low on the spinning top should be a sign to you that a reversal higher is going to happen and not a continuation lower. I actually see spinning tops as more reversal candles than continuation ones. The hanging man pattern looks just like the hammer. It has a small body at the top with a long lower wick, but its close is lower than the open and shows that even though buyers pushed the price up, sellers came in hard during the session, and that could mean trouble ahead for the bulls. And if the next candle actually closes lower, that could be a confirmation of a downtrend. And we can actually see a perfect example of a hanging man pattern here in dollar Swiss. It's coming after an uptrend, a lower close the following candle, and the beginning of a deeper correction dollar Swiss. So let's take a step back and recap. When you see big body candles like the Marubozu, you're seeing strong conviction, buyer sellers taking full control. I love these candles. When you see long wicks, that's a rejection. Someone tried to move the market and failed. And when you see small bodies with long wicks on both sides, like spinning tops, you're looking at hesitation, a possible turn, a tug of war that could swing either way. But here's the key takeaway. Never trade just based upon candlestick patterns alone. Candlestick patterns can be very powerful, but context is everything. Always zoom out and ask yourself, what's the overall trend? Are we near a major support or resistance level? What does volume look like? Because when you combine candlestick patterns with structure, trends, and confirmation, that's when you start seeing the high quality trades instead of the noise. So whether you've been trading for 10 years or 10 weeks, learning to read candlestick patterns can really give you an edge, especially if you're able to identify them right away. And in trading, small edges can add up fast. If this video helps simplify things for you, please make sure you hit that like button. It really supports the channel. And if you want more strategies, walkthroughs, and live trading examples like this one, don't forget to subscribe to our channel. New videos are dropping every single week to help you trade smarter and with more confidence. And let me know in the comments below, what's your favorite candlestick pattern? You know mine is the Marubozu. But do you like hammers, shooting stars? Let me know. Thanks for watching, and I will see you in the next video.